All right, Ron Quaranta has over 3 years of experience in the global finance services and technology industries. He currently serves as the chairman and CEO of the Wall Street Blockchain Alliance, of which Bitwave is a member. It's one of my favorite groups. We have such a fun time. I miss our Zoom happy
virtual
hours.
happy hours.
Virtual happy hours. We gotta bring those back. The world's leading nonprofit trade association promoting the comprehensive adoption of blockchain technology and crypto assets across global markets. This fireside chat features State Street. We are super excited to have Nitin Guar, the managing director, leading digital asset and technology design. In a previous role, Nitin Guar served as the founder and director of IBM's Digital Asset Labs, incredibly prestigious, like very, very cool work that you guys did over there, who is committed to devising industry standards, use cases, and working towards making blockchain for enterprises a reality, and was appointed an IBM Distinguished Engineer, which is also super impressive because, like, I think the guy who invented the microchip was like an IBM Distinguished Engineer. I mean, that's like, it's pretty cool. And then also Akene Izomo from State Street. Akene is did I get that right? All right, good enough. All right. Akene is a lead product manager for State Street Digital, supporting the development of the bank's digital asset platform to enable custody and payment capabilities. He has been in the digital asset industry for 5 years, lending his expertise to fund accounting and custody services to State Street's goal of supporting its clients in the new digital economy. Ron, take it away, my friend.
Pat, thank you so much. Amy, the entire Bitwave team, thanks for a great event. It's great to be here. So we're here to talk about institutional adoption of digital assets. Nitin, Akene, the three of us have been in institutional markets globally for a long time. We've been in blockchain, digital assets, and crypto for a long time. We've been in it long enough to remember if you walked into a corporate a few years ago and said, hey, crypto, Bitcoin, you got thrown out. Sure. What's the evolution of institutional engagement in crypto and blockchain been? How has that evolved? And where do you see that going? Where does it need to go in the future? Nitin, you want to start us off?
Yeah, so it's interesting you mentioned that because in 2016, 2017, when we actually went out in the market, we would go to banks and our strict instruction was don't talk Bitcoin, talk about enterprise blockchain. And it was a weird conversation because you cannot talk blockchain without referencing the history and the genesis of it. And now we're talking MICA, and now we are actually grilling Gary Gensler. So to me, it's a progress, right? So over time, I think we've seen emergence, what I have labeled as emergence of crypto as fifth asset class, which is, again, we have the 4 traditional asset classes, and you begin to see the economic fundamentals that drive what defines it the fifth asset class. But also, in terms of where is the business? Not only the fact that it has an economic impact of what we're doing, but where is the business of this for traditional finance? But there's also a massive sort of uprising in what we call as crypto finance. These are the Coinbases of the world. They didn't exist a decade ago, but now they actually have flourishing business. So to me, all this is progress, and my job, and I think Gigani's job in this case, is to figure out, one, where is the opportunity, where is the puck heading, and what do we need to do, not just technical capability that we need to build, which is why we all are there, but also in terms of the business imperatives that drive the industry per se. So I'll pause here, I'd love to get Gigani's thoughts.
Yeah, I think it's very much along the lines of what you've described, Nitin. I think initially when we started, it was denial that this is even a real thing, and then some sort of interest or intrigue, and then acceptance. Where we are now is experimentation and building, most of all, and trying to figure out the business and the economic formation and how these things need to come together to actually create and drive benefit for the industry and for the participants. So we are really focused on services to support these assets, how to create broader adoption of not just crypto, but thinking around forms of tokenized assets, and what's the role for State Street and other participants in the marketplace to drive adoption of the digital economy.
Thank you both. I want to rip up the script a little bit. I know we talked a little bit about prep. When you're talking about an organization like State Street, how important is education, both internally within the bank, for example, on crypto and blockchain? And we know there are challenges depending on company size, but also for your clients. How does that look in the future? What needs to happen there?
So for a decade, so IBM served, when I was at IBM, we served 90% of the world's banks. The first 5-6 years went just in education. We made a ton of money just educating clients in terms of saying like, hey, soup to nuts, this is what you do, this is what you build, this is how it impacts your business, this is where things are heading. I think the financial service industry, and coming to State Street now, there's a massive effort, and I think it takes a village. and there's reason for it. I'm happy to describe the market infrastructure impact of the shift that the industry is going from digitization, which is so when Gary Gensler says that we are using digital technology to move our asset, there's a lot more to unpack there, because the industry that we are proposing should shift from digitization to tokenization, and that has imperative on existing system that manage. So there's a lot of education that we have to, not only internally, because we need internal buy-in of people who have been running the business for the longest time, but there's also a education to the regulators that we work with, because we are what we call as a GCF, which is globally systemically important financial institution. And as a result of the importance that we have on the economic imperatives of the country and the world, we have to educate a lot of regulators. And then you have clients. But what I have seen, and I'd love to get Akini's opinion on this after I pause, is we see a lot of investment management, asset management community coming to us because they're in the risk business and they want to be able to get into the space, asking us to shift our thinking, shift our systems to be able to accommodate the business that's coming from crypto per se. So I'm happy to double click on that at some point. But
Yeah, no, Kenny, please.
Education is massively important. I think the initial challenges around how to communicate the benefits of the technology and sort of moving away from what you saw on the news and a lot of the technology crypto speak, but bringing it down to the everyday impacts of what the change is. I think it's a message around change and how this change could take effect. I think that's the key thing that needs to be communicated, and there needs to be sort of conversations. There need to be industry meetups just like this to communicate where the industry potentially could be heading. I think that's the key message that needs to be embedded in education. It's change and also it's not just change for change's sake, but change for making things more effective and basically making the case along all these participants, internal, industry, and even most important with the regulators.
Yeah, the perspective that we've had is blockchain, crypto, digital assets allow us to say, how do we do what we've been doing and why do we do it that way? And would you agree that that's tied to this education process? Because, and not to beat up on regulators or legislators, but there's certainly this perspective, it seems. Well, it works. Why do we need crypto? Why do we need digital? Yeah. You keep talking about cost savings. You keep talking about transparency, but we haven't seen it. How do we respond to that?
So two things in this, right? I do want to discern at this point in time between crypto assets, which is digital assets, Bitcoin, Ethereum, and the entire ecosystem that's evolving around it. Yeah. And what we call as tokenization of existing asset classes. So underneath of all these sort of various asset classes is blockchain technology. By nature, it's disruptive. By nature, it's supposed to collapse all business processes that are fragmented across the entire financial system, leading to the challenges that we have in movement of assets and changing ownerships and so on and so forth. So by definition, it's disruptive and it's meant to disintermediate. Well, disintermediation is a key topic, because the question then becomes, if we use the technology, who collects the rent now and who goes out of business at some point? And we have to deal with that head on. So in many cases, what we begin to do is understand and say, can we preserve the market infrastructure? So these are all the various sort of players who are part of the entire market infrastructure, providing different services, providing the counterparties that are meant, and that's a part of evolution of existing financial system. And figure out as to, can they still have the same role and use the technology to induce transparency, to shrink the notion of time and trust, because now you have the information dissemination is synchronous and you're able to then move things faster. That's the narrative today, right? So we're not saying, let's not talk about disruption or disintermediation. We will modernize the financial system, and just like travel agencies and many other information intermediaries are gone, we begin to see that conversation take shape now, which to me is almost a decade worth of lag effect when you begin to see industry adopt these things, I think.
Yeah, I think, at the core of it, it's if you emphasize what the technology brings, and it's all around data, transfer of data, the distribution of work. Effectively, that's the message that we're trying to capture, to say, as a large financial institution that has records in different systems, and how do we sort of remove all of these inefficiencies and reconciliations that need to happen. That's where the technology comes into play. So we don't, the key point for us hasn't been so much on just the asset, crypto, for example. It's really, how does the technology drive just creativity around how we think creatively around changing and making things better for our internal systems and for the infrastructure in general. So there are a lot of things that, when you think about it just from a technology standpoint and how it influences business processes, the benefits are clear. However, there's this dilemma, the way you have to think about the economic, considerations. You need to think about regulatory considerations as well, and basically, how the market should come together, the participants, whose role is impacted, what needs to be preserved to retain integrity in the financial system. That's where the rubber meets the road, and there's a lot of work that we're doing.
Yeah, and we have information and data to substantiate that. I think the last report I had read, probably 2020, United States banking the industry spends $20 billion a year just on reconciling mistakes.
That's right, and so collectively, I'll just give you a perspective, and I read just like you, keeping up with what's happening. The entire asset class in the world of all the bankable assets, these are equities and bonds and other, is 470 trillion, plus or minus a few trillion depending on the market, right? The entire industry globally spends $1 trillion just to maintain the systems that exist. These are reconciliation, ensuring what is
annually.
Annually.
Yeah.
So to me, my business case is if I can solve 5% of the problem, I have an ROI in those use cases. So it's people, time, technology invested in simply reconciling. Get that in this day and age, when you had massive focus on ChatGPT, which is large language models and generative AI and everything else. We are still spending people, time, technology to reconcile books. And that's because you have the strapped business ecosystems around every financial institution that has to link up to formulate what we call as the market infrastructure. And I think we should move from that. We should modernize that regardless of the business imperatives to come to the true digital age. And I'll say this again, I've written about this extensively, that the narrative in financial services industry has been digital transformation. Let's go and digitize XYZ. And I think we should change the narrative from digital transformation to transforming digital. What do we expect from digital? Are we doing the right thing, the digital handshakes and ability for us to, and that requires a little bit of thinking in terms of investment in technology that we have to make to achieve that modernization that we expect of the financial infrastructure.
I want to thank you, Nitin. I want to pivot a little bit. You had mentioned tokenization earlier, and I think it's important to peel back the layers of that. My hypothesis is that the multi-generational capability that fundamentally reinvents how we do what we do is going to be tokenization, both of digital and physical assets. We're talking about stocks and bonds and real estate and on and on and on. How do you see tokenization evolving over time? And I know there's a bit of a predictive conversation here. And what does that do to the core systems you just talked about? Core banking, core payment, core healthcare records management, core, you name it. Where do you both see that going?
So I think, blockchain, crypto, if you think around just the change that it's looking to make is well suited for the financial services industry. So I'll stick to that, because a lot of what we do is sort of transferring value and ensuring, there's a finality in how you achieve, value transfer. For tokenization could have a massive benefit. I think one area that isn't necessarily paid attention to is how to actually represent cash, how you have digital payment solutions that work in concert with the asset tokenization platform. So to be able to transfer value and have things settle delivery versus payment, there needs to be a synchronization between how you represent cash on a protocol and transfer that instantaneously against the asset. That's one area that it's missed, especially in terms of institutional solutions. So there's stable coins, but those don't satisfy wholesale challenges when you think about counterparty risk, credit risk, and settlement risk, and that's what regulators are big on. If you think around what CLS does, for instance, it was created around managing FX risk, and we need to think about we need to create effective cash solutions around to support tokenization. So I think you're going to continue to see folks want to tokenize assets. I think the bigger switch will come around, how do we represent cash to be able to make things seamless?
Wait, CBDC is not going to cover it for everything?
Yeah, so CBDC, I just don't see that. Just don't see that ever happening, especially not in the U.S. or certain jurisdictions. I just don't. Yeah, it's personal opinion. There's a lot of politics around that. The change it's probably too big given sort of the philosophy of the country. The principles of what America
Meaning
is.
what you're seeing from a regulatory and legislative perspective.
It's just going to be hard, I think.
So for the audience, that question that you asked, Ron, has changed our looks from what you see in the picture. Us be younger looking.
That's when I got gray. Yeah.
And he used to have full thick of hair, and he started thinking about this.
Yeah, that's why I have mine in black and white.
But I'll say it's a few things, right? One is interoperability. The financial system that we have today, something as simple as decimal places. So an average crypto has 8, 12, 13, 19, depending on what protocol you're in, decimal places. Our financial system has 4 decimal places. So suddenly now accounting becomes a challenge. You have the entire apparatus of taxation, accounting, and so on and so forth. That has to coexist. The valuation of asset is a huge challenge. So one is interoperability, coexistence, technology. These are some of the pillars that I think need to be addressed. And the question becomes, can we do it while existing financial system is running, or do we build a parallel system and eventually do a cutover? And that's where we all spend, him from product perspective, me from tech perspective, spend all our time in figuring out what is the right path to get to that point.
Yeah. Thank you both. I know we're going long, guaranteed. I might as well warn Pat now. I just, you mentioned something earlier. We touched on regulation. So hold on to your hats, folks, because we're going down this rabbit hole. And again, we don't have to necessarily get into specific cases, but you referenced, Kenny, regulation and kind of the perspective here in the States. How do you think regulation evolves, particularly in the wake of, if we look overseas, MiCA in Europe, we see what Singapore is doing, we see what Dubai is doing. How does this impact the strategic plans a State Street has? And where do you think that evolves to?
Yeah, without beating the horse here, I think regulation is particularly important because for banks, we are playing in a field that is a derivative of market structures and market forms that are dictated by regulation, right? So we need to absolutely comply. I think hopefully where we should go is where there's consensus between the regulators and market participants coming together, and there's public opinion, and all of these things are sort of forming the framework of legislature. At least that's how it has happened in Europe and in other countries in Asia. And maybe moving away from this approach of treating things on a one-off basis, or at least focusing so much on the technology. It's actually quite fascinating because in Europe, the regulation tends to be around risk and counterparties and risks that each participant has in the system. And here, it was more so around integrity and investor protections. But now there seems to be more focus on the technology here. Right. So I think there needs to be this focus back on how does the market come together, and creating more public consensus around the forms for regulation.
I feel Nitin wanting to add to that.
No, it's a long conversation. I actually run this on my podcast in terms of dissecting these things, having, at least in IBM, I used to read a lot of regulators, front row seats, to talking to just central banks. But to me, is broadly into, are we treating this fifth asset class and force-fitting this into the existing fiduciary and prudential treatment of assets, which has its problems and has its advantages to say, can we treat? And I think MiCA, while it is not comprehensive, they say it's a comprehensive test, but if you're in the industry, it's certainly not the most comprehensive, but I think it's a great start. It provides you a framework, it provides you classification elements in treatment of these assets, and then goes with the risks and prudential treatment of what we do. Again, prudential treatment, for many of you who may or may not know, is again, what do we do to make sure that we have enough guarantees behind your asset as we're dealing with, being prudent with your asset and how you treat with it. So to me, one of my jobs is to be able to ensure that how do we build technology infrastructure, because this is technology led. You have to solve this problem with technology. How do we build that transparency and build systems that is compliant to get-go and reduce the cost of compliance, which then opens up the door for regulators to understand the disruption and embrace it as opposed to fight it.
So would you, to that point, Nitin, would you agree, so the industry, in the aggregate, has often said there's no clarity. right, when we talk about regulations. And I don't know how comfortable you all are going to be talking about it, but recently a major market player sued a regulator. Will that type of action get us to, shocking, I know, and way overdue. But that being said, will that kind of action by the industry get us to the clarity you think needs to happen in the States?
To me, it's understanding, right? In the sense that you, again, when someone like, and I'm going to say it, when our SEC chair says we have enough regulation to deal with the asset, and having claimed to have taught a class or anything else, I think there's an understanding of what is behind it. So when we, and this is just talking about crypto, we haven't even gone down to NFTs and Web 3.0, completely abstract concepts from where many of the regulators are. And that's where the world is heading to. So the question then becomes is, I broadly classify this into 3 I's, right? Infrastructure, what is the infrastructure we need to be able to move these assets, and what's the regulation behind that infrastructure? Because every infrastructure is regulated. Second thing, instruments. A token is a token is a token. But how do you decipher and discern that token from its asset class? Because it has the same rails, has the same characteristics. So your cash, a USDC, for example, as a stable coin, is different from like a CBDC, but how do you treat them? Because from a token perspective, they look the same and behave the same. And then you have the inside. You have enough data to find financial crimes. And what regulators are focused on is, look, we've had this 1930s and 1940s Act, and let's apply that to 2022. It's a mismatch. We have to rethink this. And MiCA is a first step in the right direction, I think, and it's unfortunately coming from Europe. I think it should come from here.
Yeah, it's unfortunate, that we have to resort. These some players need to resort to the courts to figure it out. Let's see, time will tell. But I think there just needs to be greater consensus between market participants and the regulators to come together to figure out what the impacts to business processes, risk, AML, KYC, just maintaining the integrity of the market. I think of the system, and I think we can do that, as an industry.
Yeah, and I think there's this false narrative in certain circles that, well, you don't want clarity, crypto industry, blockchain, tokenization industry. You don't want to, that's not the case. People want to protect investors. Organizations being built in this ecosystem want proper KYC AML, for example. And I think part of the issue there is you can't pattern match 90-year-old laws with the pace of innovation that we're seeing.
And to broad brush the entire industry based on what I've called the contagion of incompetence, 3AC, Luna, and FTX, to broad brush the entire industry with the same lens is also not fair. And I hate regardless of fraud happens all the time, my only qualm with FTX going down last year was the fact that you had so much influence and you misuse that influence in terms of doing positive change. But anyway, I think...
Yeah, and fraud is fraud, right?
Right.
And that's some of the things that we're saying. Not crypto is bad, this is why this happened. I know we're running out of a bit of time. Sorry, Pat, but we're going to keep going. Bitwave's got amazing tools, and I would love an institutional perspective. We talked about valuation and audit and reporting, et cetera. How does the evolution and adoption of blockchain and digital assets and crypto impact that? What are the tools needed now and in the future?
So I'll say this from technical perspective. I'll have to get Akinis from product perspective. Huge challenge for crypto. One, right. I mentioned, where do you get the pricing from? Exchanges, typically not. And that's the only source we have now. Same thing with taxations. How do you tax something which, again, you have protocols that are paying interest by the second, who have NAV calculation problems, who have decimal place problems, and our core banking systems, which are the historical sort of systems that maintain the record of ownership and system of record, is all haywire at the moment, which means they are completely, at a very bits and bytes level, incompatible systems. So what do? Well, we create intermediaries. Well, that's a problem, because the entire purpose of blockchain is it is a system of record. So creating intermediaries, you're creating more challenges. So these are some of the technical issues, but I think there are some innovative projects. I find, again, what Circle has done with stablecoin provides that whole element, what Bitwave is doing from tax structure, accounting, and many of the conversation we've had here, are essentially the scaffolding we need to be able to put this industry in a path that we can account for things, we can pay taxes, we can have NAV calculation that deals with the existing elements that go with managing a fund and accounting for a fund and so on and so forth. But I'll stop here. Time is.
I think what the industry, at least what the technology has actually forced a lot of banks to do is to really think data first, think in the context of data management, data delivery. That needs to, that's at the foundational level, that's what it's forcing us to do. Instead of sort of, as Nitin said, thinking about who is going to help us with this, but how do we organize ourselves? How do we organize the data and information to be able to support these activities? Yeah. So a lot of things that are sort of typical, maybe in the consumer, in a lot of consumer-facing industries with cloud deployment, API first, thinking around how you streamline data, how you have microservices to communicate between applications and making things seamless. I think a lot of those aspects of blockchain and of crypto that you see playing out today is actually sort of influencing how we change and how we create business processes to be digital first,
including the ownership and control of data.
Correct.
And that's a seismic shift. So I know we're going a little bit over. Let's just kind of wrap it up. The three of us are pretty deep in this space. How do you see the rest of the year playing out? Any predictions, or what do you hope happens between now and the end of the year?
I stopped predicting crypto. Things change very fast. It's pointless. But I think there's a resurgence in enterprise. So to me, it's a joke that every time you have a bear market, enterprise blockchain pops up to compensate for everything
Blockchain,
else.
Not crypto?
Blockchain, not crypto. But I think that there's the fact that we are at this point that, we are talking regulation, we are talking, Micah, it's a progress to me, which means we are talking about these things and we are adopting it. People like again, the reason why I joined State Street and working with Akine is because we want to truly make a difference and make a change in modernizing the financial infrastructure. All that is progress. I think there'll be more of this. I don't expect a sea wave change by the end of the year. Like, look, we've done it. To me, what we're working on is literally a 5-10 year effort. From a crypto perspective, I think there'll be some stability in terms of protocols and not founder worship and so on and so forth. Looking at real project, real economics, real technology, which is completely amiss in many projects, I think.
Yeah. So at least my hope is less on value and price. I've always thought the more you see these things in the news, the worse off it tends to be. So my hope is there's less attention on the price of Bitcoin, price of Ethereum, but more so, as Nitin said, sort of industry adoption, developer activity, and you're seeing, I like to, with Coinbase, what they're doing around their own layer, their own layer 2, and sort of driving industry applications and other decentralized apps on those on that platform. I would hope, my hope for this year is that continues to be the emphasis for the industry, and so that's the first thing. And just back to school on cybersecurity, data integrity, because at the end of the day, that's where a lot of these companies sort of fell down on.
Question for you. Wall Street Business Alliance. What is your thing? You work with all our brothers and cohorts.
So we as a not-for-profit trade association, our mission is to guide and promote the adoption that you're talking about. So our members are banks and broker-dealers and hedge funds and amazing technology providers like Bitwave. One of the things that we're seeing is, and I would mirror a lot of what you're both saying, the crypto is bad perspective from those who have been involved at an enterprise level is going away. But it comes down to show us what you've got, right? You've been talking about the cost savings. Show us where that happens. You've been talking about the efficiencies. Show us where that happens. Because as these enterprises begin to look at their long-term strategy, it becomes a matter of what does our roadmap need to look like? And we can't have that roadmap unless we understand blockchain. We can't have that roadmap unless we understand tokenization. And again, it's the education component of it all. I long ago gave up predicting prices of crypto, so you'll never see me do that. And we didn't even touch on half of the agenda. We didn't touch on DeFi. We didn't touch on SAB 121. We never got to NFTs. Those are sessions all on their own. That's right, yeah. But I think we use the baseball analogy, right? We're in the first inning. I think we're getting to the ballpark. And I think that's how early on some of this is. Yeah, so I think we're out of time. Nitin, Kenny, thank you. I don't even know what time it is, but thank you all so much. Thank you, Bitwave.
Thank you.